A very good morning, everyone. Good morning to all of you. How are you all? Hello, beta. Hello, Prithvi, Rajveer, Diksha, Deepak, Darshan, Harshit, Sunil, and all rest of the students. Come on, show me your presence fast. A very good morning, everyone. Come on, show me your presence fast, everyone. So I hope you have done your homework properly. Sir, how can you? We have never done. You already know. You are also students. Yes, I know. But at least a revision must be there for the last class. Definitely you could have done. Hello, beta Vigneshwari, Maring. Maring, you didn't message in the last class. I was missing you. Hello, Sunil. I am also fine. Darshan. No, before NBFC, we have some more topic that those are common for NBFC also. Don't worry. Okay. Before NBFC, we have one more topic that has to be practiced today. Even that was not discussed earlier. Yes, everyone, I am waiting for your message, everyone. Give me your message so that I can understand how many students are there. Prithvi, I think there must be some video also in the batch so that we can also see how many students are there. Hello, beta. Late for 20 minutes? No, I'm not late for 20 minutes. Actually, this is the lecture which must be taken on 7th of September, but just due to Janmashtami festival, we have pre-arranged such lecture today. Okay, you were late 20 minutes in the last lecture. Okay, beta, Maring. Anyways, okay, come on. Let's start today's session. So, I'm also opening my book, everyone. Open your book fast. Banking companies chapter over there. Banking companies, yes. And I think we have practiced a lot. And now it's the time to pack up this chapter with the remaining part of the unit. Come on, let's have a overview. Beta, as I told you that these are the remaining chapter which will be discussed during these continuing session with all of you. And we are now on this stage, banking company. Okay, beta. Today we shall also start our NBFC. Next one. And don't worry, 1.5 lecture is more than sufficient for an NBFC. See, we have learned in this chapter that yes, but I am from there, Darshan. Anyways, everyone, yes, you can Google me. Okay, beta. Anyways, banking companies and NBFC, we understood each and everything about this from theory till the end of all the questions of numericals. Government sector, then banking company. If it is being done by other than government, means by company, then these are called NBFC, non-banking, because banking word is for government sector only. Non-banking finance company, because those companies are registered under the Companies Act 2013. NBFC and banks are having the difference. I'm not teaching right now NBFC. I will teach NBFC after completing the remaining topic of this chapter. Okay, beta, don't worry. I'm just giving you some review, nothing else. Very good morning, beta. Komal, Manisha, you are late. So NBFC cannot accept demand deposit, and bank are only the person who can accept demand deposit, which are payable on demand. All the financial activities are being done by bank, and these are also registered with the RBI. See, Banking Regulation Act applies, and for NBFC, Companies Act 2013 will apply. Okay, minimum capital must be there. That is 200 lakh. That is 2 crores. Good morning, beta Sahu. So there are two types of banks: commercial and cooperative banks. Commercial are having the profit making purpose, and we understood that These are the theory which are coming in the unit number 1, from where we have to understand some theoretical part, and some regulations part are also there, which are to be applied in the numericals, like statutory reserve fund, like dividend, like cash reserve ratio. Beta, please correct that now CRR is 4.5 till the time. Statutory liquidity reserve, that is the 18% at least. Sir, how we have to check these things? Suppose if anyone which belongs to next attempt, I am giving just some thinking, how the rate are find it. Usually you will find that before the exam, students usually ask at each social media and WhatsApp on what will be the SLR, what will be the CRR, etc. for our attempt. Beta, please check one thing. You are about to be chartered. You must have the clear understanding from where such rates are to be checked. First of all, being a student, CA student, you must check RTP. Whatever the rate is there in RTP, that must be applied according to your attempt. Those which belongs to next attempt, but still those are watching these lectures just to cover the things early. Beta, don't worry. In your attempt, whatever the attempt is there, those students must see the RTP of that attempt. Anyways, sir, after being chartered or after being articleship, also such chapters are relevant. How can we check these? Beta, there are prudential norms. See, prudential norms circulars. Of RBI. Please have a good understanding of this chapter, because this chapter will be utilized, will be used by you in practical environment also. And I never give you any kind of things in the class which can be called as non-practical. But I am also practicing chartered accountant, so I want to give you things in the proper manner. This is our duty. So I am giving you some more things. But please search at Google. How will you do the things in practical life? See, sir, will it come in an exam? Beta, maybe theoretical part are there. See, master circular for prudential norms of RBI. Beta, please search, and you will be directed to the RBI site, directly to the link, from where you will click and you will move to the circulars. Beta, see, this is the circular. The same has been printed in our book. While you will be clicking here, you will be finding here master circular prudential norms, where you will be finding what do you mean by these things. See, all the things have been copied in our study material. See, like non-performing assets. See, all the things, although I told you through chart, but all these things are there which have been printed in our study material. Please be practical chartered accountant, not the chartered accountant which are not having the practical knowledge, only the theoretical knowledge. But after being clear in this attempt, you will be directly moving to the practical life through articleship, and after being chartered, you will be practically auditing or accounting. But according to the years, the circulars are having amendments, and here in the right side, you will be finding the circulars updated according to the attempts. Anyways, now see, one more thing is also there. See, if you want to see more things, you will be finding here more things. Sir, what do you mean? Income recognition policy we have learned. We have learned the provisions also, category provisions norm. You will be clicking on the provision norm. The same provision norms are there, same percentages are there, which have been printed in our books. Beta, please be the chartered accountant which are really good in practical environment also. Only then you will be earning the amount whatever you are thinking. Only then you will be earning the respect whatever you are expecting. Anyways, beta, see, there is a percentage regarding low assets, doubtful assets. See, 100%. See, doubtful assets up to 1 year, 25, 40, 100. You have done all these things. What do you mean by substandard? What is the percentage of that and that, etc., etc., etc. All the things in our study material are also coming from such circulars and such banking sites. Okay, beta, RBI. All the things are being computing. We are computing from here. Okay, beta. See, for each and everything, you will be finding the things here. Sir, now what do you want to say? Clearly tell us. Beta, I am closing this site now. Beta, in our attempt, first we have to check. First we have to check our RTP. Number one, we have to check our revision test paper according to our attempt. Next, second thing, then we have to check master circular of RBI. In practical life, the order of such is reverse. In practical life, you have to check only the master circular from which date such is being effected. Anyways, beta, now after changing in the last attempt, the rate of CRR has been changed up to 4.5% and SLR has been updated 18%. Anyways, now coming to the chapter remaining part. Beta, first we must understand what are the type of question we are expecting here in exam. Complete questions, income recognition, we are discounted, we have done. Sir, you have repeated so many times. Yes, I want to fix in your mind that only these are the things you have to done and in the systematic manner. From very first day, I am telling you all the things must be done in systematic manner. Up to the third point you have already covered in the last class. Now it's the time to cover questions of financial statement, from where you have already covered balance sheet question and P&L question. And now it's the time to cover the last part of this chapter, that is capital adequacy ratio. So as usual, I want from all of you that you are ready, give me ready, so that I can understand that each and everyone is there, which I've understood what the chapter has been covered and what the chapter is having the remaining part that will be covered in today's session. Can I expect everyone? Those which are watching at YouTube, they can also give their presence by giving their like, share, etc., etc. Yes, come on, Sahu, Manisha, Komal, everyone, all those friends. Sir, let's start. Yes, beta, let's start. You will be finding one more PDF today that will be uploaded, okay, where you will be finding these things. Capital adequacy ratio. Capital adequacy ratio. So yes, I have received a lot of ready now. Yes. Beta, see, Basel committee norms word is also we usually listen in our practical life and from our friends. So if we solve only the question and we get the marks, and even after that, if we could not be able to answer the theoretical part also, those are relevant, very, very relevant for us in practical life also, then there may be a loss of some reputation also for you, that you are having the chartered accountant degree, but still you are not having the basic understanding of the concept. So I am telling you one thing, that I have already prepared these slides and I will be uploading only the things you must understand. Beta, what the kind of banks are having risk? First understand what the kind of banks are having risk. Sir, banks are having the risk, such kind of things. What kind of things? These kind of things. That if all the public persons, what I'm telling you, all the public persons are coming on a single day, to take the money back, then how will they pay all the things? Suppose all the public is coming on a single day and asking for money, you already know the cash reserve ratio, all the amount is deposited with RBI, and in such case what may happen, beta, bank may get failure just because of liquidity. So sir, हमारी बैंक ऑडिट में भी हेल्प करता है ना? यस बेटा, यू आर राइट. सी these are very much practical beta. I am also since you are asking Hindi, I am telling you in Hindi beta. हर्षित, मैं प्रैक्टिकली बैंक ऑडिट्स भी करता हूँ, 2010 से कर रहा हूँ और काफी अच्छे लेवल के ऑडिट किए हैं. सो मैंने प्रैक्टिकली सारी चीजें अप्लाई की है और ये पूरी चीजें प्रैक्टिकल है बेटा. ठीक है हर्षित, तो पूरे ढंग से पढ़ना, एकदम मन से. एनीवेज, नाउ मूविंग बैक टू इंग्लिश. यस बेटा, बैंक रन. यस, डोंट से बैंक रन, बैंक कोलैप्स. बैंक कोलैप्स, it means there are some of the kind of the risk are there are risk factors with the bank. Risk factors with the banks. Even there are risk factor of two types. Liquidity, number one, liquidity. See, liquidity type risk, you know, liquidity risk. Yes, liquidity risk. And what kind of more kind of risk are there? Come on, tell me everyone. Is there anybody who can tell what the kind of risk are more there? Who can tell me? Come on. Number two, operating risk. Yes, of course. Operating kind of risk are there. Bank operations suddenly stop due to any reason. Such a kind of risk are also there. Market rate risk are also there. Marketing rates risk are also there. Okay. Yes, compliance risk, very good. Those are called operation risk. Okay, beta. And more things are also there. Yes, credit risk. Credit risk also. So these are the kind of risks which have been observed at international level in the starting, in very starting. So beta, this theory is totally depend on this kind of understanding, only on this understanding. See, capital adequacy ratio as per Basel committee norms. What do you mean by Basel? Beta, in the city of Switzerland, Basel is a city. Basel is a city, and headquarter of international settlements was also there. In 1930, it was established in 1930, 17th May. Okay, beta? Yes, very good, beta, Manisha. Those are called operating risk. Okay, beta? Now see, controlling, for the purpose of controlling these things. Okay, beta? Such committee was established, and such committee has observed that these 60 countries on which such a kind of regulations are required, these 60 countries were representing at least 90 to 95% of world GDP. See, to make the bank ready for comfortable bearing of such laws, such norms were made in this way so that there may be coverage of risk and bank would be able to bear the risk, so that bank cannot get collapse. So beta, such a kind of thing was observed in that time, and in 1974 such committee was established, and what happened, beta? See, such norms were developed by the committee. These were called Basel norms. In the starting, the norms were, yes beta, mandatory for all the banks. Yes beta. Even one more thing I want to tell you, since you are asking these things practical, definitely some of the students are also doing practical things. Beta, for this, Institute of Chartered Accountant of India has issued some booklets separately. These are called circular for bank audits, etc., etc. Beta, many things are there. I am also having those things in my office. Anyways, so in the starting, these norms were called Basel 1. Basel 1. These were Basel 1 1988. But here what happened? Here capital measurement were there. Anyways, credit risk were covered by these things. in this case, such was decided that first we have to calculate what the kind of risk banks are having. Banks are having credit risk. For this, bank has to calculate the amount of loss that could have happened if certain mishappening is there. So for this, some percentage were decided to calculate the risk of each and every assets of the bank. So on the bank, in the balance sheet of the bank, we are finding different assets. For each and every assets, we are multiplying with the percentage. Suppose bank has given loan to other bank has given loan to RBI. Definitely there will be risk with those banks. Those are other banks. So at least some risk is there. In the RBI case, there is no risk. If a bank has given loan to venture capitalist, the person who are starting their own new venture, definitely there are higher the risk. So there are percentages are huge more, like 150%, etc. So these kind of the assets in which we are categorizing all the assets in the different categories, those have been multiplied with their risk percentage, and that risk percentage has been decided by the Basel committee, so that at least there must be some calculation of estimated loss. Okay, beta, so that we can understand how much risk is there. And also one more thing is there. It is to be checked. It is to be checked whether bank is having so much of own fund capital. You know, in case of balance sheet, what happens? We have already learned the debt equity ratio also in different parts. Yes, sir. What happens? Suppose there is a balance sheet. Suppose there is a balance sheet and we are having the assets and we are having liabilities and we are having capital. How the liability come in our balance sheet? These are the creditors. It is also a general thing. These are the creditors which see first this capital, that how much fund is there from owner side. Debt equity ratio says maximum 200 times of that we can give loan to that. Why we use to calculate the debt equity ratio? We use to calculate such ratio to calculate the solvency risk, whether there is chances of insolvency or solvency. So beta, in the same way, in case of bank, we have to calculate these things. First, we have to calculate what the amount of the loss bank can be in the situation where we have to calculate the estimated loss of the amount. Okay, beta. And also we calculate what the bank must maintain their capital. At least this capital must be there so that such loss can be borne by the bank. In the situation, bank could be able to handle such loss and bank will not collapse. Beta, earlier it was 8% in the starting. Don't say, sir, you are telling us old percentage. I am giving you the complete knowledge of these committee norms. Okay, beta, this is the latest percentage which will be told by me after a few minutes. Okay, beta, it is the starting percentage. At that time, it was told that total capital of the firm must be compared with the risk weighted average assets. Means the assets have been multiplied by the risk percentage to calculate what the kind of assets loss will be there that could have happened if the situation is there, and for that what the amount of the capital is there to compensate that. Anyways, so beta, capital adequacy ratio and capital risk weighted adjusted assets ratio was at that time at least 8% capital must be there. Don't worry, please listen carefully. You will be able to answer each and every question. After that, after some time, what happened? In 2004, Basel second norms were coming. They came with the more coverage of risk. Not only the credit risk, more risks were coming into knowledge, and those were also covered. Marketing risk. So focus was changed with more risk, that bank are to face more risk. So those factors were also being covered, and accordingly the percentage was changed or updated with the more factors. Next, and after that in 2010, while UK bank collapsed. It was collapsed just because of liquidity. The funds were blocked in their secured assets, and the security is there. Those person who were having the loan from the bank, and they have secured their assets. In that case, what happened? The market got down, and they denied to pay their loan. They clearly says that bank, you can sell our assets. It was just like bank was the property dealer. So, beta, in such case, it was found that liquidity risk is also there. That bank has to maintain the liquidity also, because if fund have been given uh, with the security of assets to the public, and all the fund have been given to public, but still other public person are asking for their repayable on demand, and if we are not able to pay those things timely, then also bank collapse. UK bank was also collapsed because of this reason, and then such norms are further updated to cover this risk also. In 2012, second by RBI issued a guidelines, Basel III norms, that has to be followed as a capital regulation to be applied for bank. Okay, but implementation date has been given now, fully implemented from 31st March 2018. It means financial year 17-18. From this, Basel III were implemented fully. Now the latest percentage is there. I'm going to tell you, don't worry, wait a minute. As per latest percentage, I think this has also been changed, 9%. No, it is also still 9%. Anyways, now, yes, beta. If no, beta Darshan, if any updation is there, only then. So in practical life, you will be auditing the banks, maybe private banks, maybe domestic Indian bank, foreign banks. See, such norms were applied on which bank? Beta, see, I have prepared a chart. Indian banks, on the Indian banks, such will be applied only those which are commercial. Beta, nowadays there is no unscheduled bank, non-scheduled banks are not there, only the scheduled banks are there. Out of such, only the commercial banks are there for which such norms are to be complied with. While you will be auditing the scheduled banks, then you have to check these norms also, that these norms are being complied with or not. Anyways, sir, in case of foreign bank, beta, only those which are operating in India, of course. How can we say that operating outside India are also under our coverage? No, only those which are operating under in India. Anyways, as per norms, bank can lend money only 22 times of their core capital. Core capital means, beta, there are two types of capital. See, two types of capital banks are having: permanent capital, permanent type capital, and some less permanent capital. Both becomes, of course, capital of bank. So we have to check what the capital amount is there, and that must be at least 9%. Okay, beta, how the percentage is calculated? First, we have to calculate what the risk is there. So we have to calculate this one. We have to calculate what the amount of risk of loss is there for assets, what the assets will be lose if something mishappen, what the amount bank will lose, risk weighted assets. Here we multiply some updated norms of percentage of risk as being declared by Basel III and further updated, that has to be applied with the assets, and in this way we find out the risk weighted assets. Anyways, also one more thing is there. In case of off balance sheet items, yes, those items which are not in the balance sheet. Beta, there are two types of items which we see in the balance sheet and which we see below the balance sheet. Beta, below the balance sheet are called off balance sheet items, means contain liability. Here the risk weight has been assigned by RBI for such is also 100%. Okay, beta. In such case, 100% risk is weighted. In such case, after comply all these things, we could be able to find out what the amount of loss is there that could happen to bank. This is the loss. And for this, how much capital percentage is there? So capital fund is there. That is the less permanent and less permanent and permanent capital. Both are added, and then we are to find out this. Sir, what the percentages are there? Beta see. What the percentages are there? Beta, I am telling you and I am showing you these percentage also. First, we have to check. What do you mean by? What do you mean by? What do you mean by less permanent and permanent? Yes, beta. Darshan, you are right. Schedule number 12. Less permanent and more permanent capital. Tier 1. We usually, while we were studying, we usually say we are gonna about to run tire. So tier 1. So we are about to run 2 tire. Anyways, tier 1 capital. Okay, beta. And tier 2 capital. Here, equity share capital. Here comes out equity share capital, irredeemable preference shares. See, all the reserve and surplus except revaluation reserve. Okay. Equity share capital, irredeemable preference share, all the reserve and surplus. And out of that, we reduce these things. All the accumulated losses, intangible assets, deferred tax assets, and if we have invested in subsidiary also, then that has to be reduced from there, because we want to see what the capital will be available to compensate such loss, what the amount of capital is there that will be ready to bear the loss. Just like we are to calculate how many soldiers we are having directly on the border. Beta see, in the case of tier 2 capital, we are to calculate here less permanent capital, undisclosed reserve. Okay. In case of revaluation reserve, we have to take care of here. We shall calculate only we shall take into consideration only the 45% revaluation reserve part. It means after reducing 55%, only the remaining revaluation reserve will be available for this. Preference share capital redeemable long-term debts, general provisions and losses, hybrid debts capital, subordinate debts, maximum that can be maximum 50% of tier 1. Okay, this is the concept. Now, what about the risk-weighted assets? Beta C. In the case of risk-weighted assets, we have to check our study material always. And here, that have been updated by me in the book also. So here you will be finding capital adequacy ratio. As I told you, I have merged all the things into a single PDF. Please come to page number, this one, page number 7.58. Don't worry, these are very, very easy questions. But first you must understand the things properly. These are the percentages which you need to learn. Okay, these are the percentage which you need to learn. Only see. Okay, should I show you study material direct? Yes, let's see directly from the study material so that you may be feeling more comfortable. Let's see. Yes, unit number 3 is there. See, these are the percentages given by our study material. See. Okay. Sir, how can we learn? There are so many percentages sometimes which happens that we usually forgot. Beta see, there is very simple way. In case of more risky capital, like you will be finding here, see this one. Only these things you have to understand. Real estate, 150%. Anyways, here, please look into my study material. That will be more coverage, since some of the things are there at different point. See, you have to understand these things, that in case of banks. Okay, wait a minute. Yes. See, this one. These are the percentage which you have to learn here. See, in case of balance with other banks, you will be finding 20%. And in case of those investment, those assets which belongs to either to RBI or PSU or government sector, there is no risk. See, first understand the 20%. 20% and 0%. See, 20% always belongs to those which belongs to the assets which have been deposited with other banks. Okay. And 0% risk is there only for the government sector or RBI sector, PSU sector, where bank is having the assets. Better see the trick is there. 0% with RBI, 20% with other banks, with own banks. Okay. Now see, investment others guaranteed by central or state government. Okay, 0% risk is there. Investment in government securities. Okay, 0% risk is there. Better please see. You will learn all the percentage. Don't worry. But you have to apply the trick. As I already told you, be systematic first. Better see, 0%. Of course, definitely there could have been anything which where the government sector is there. If you will find the word government, definitely there will be 0%. If you will find the other bank, there will be 20%. Only very few areas are there. See, not guaranteed by bank, not guaranteed by central government. Okay, here 0%. See, now this one, 20%. Only in this case, not forming part of approved program. Okay, this one, 20% with commercial banks. Okay, next one, banks, 20%. For all the rest, there will be 100%. Okay, beta. And only you have to understand two things. You have to understand 0 percentage. You have to understand 20%. Okay. Then you have to learn 150 and 125 and 50 only. Rest all are 100%. Now please see 150% areas. See, first understand these things, where there will be venture capital funds. Okay, beta. Exposure to commercial real estate. Then there will be 150% higher the risk. Okay, beta. 150%. These are the 150%. Very few percentage you have to learn. For all rest, you will be finding the 100%. Now see, what about the 50%? Investment in security pertaining to infrastructure facility. Okay. 125%. Direct investment in equity convertible bonds, debentures. If you will learn these things from study material, then you will be finding more easy. Better see. With RBI, there is 0 risk. With other bank, there is 20% risk. In the government securities, of course, 0% risk. And for real estate, 150. Better plus, please write down here, venture capitalist also. Okay, beta. Although study material has given such thing at different pages of the study material, but I want to conclude this chart only. Okay, these are the things which you have to learn. Beta see, in these cases you are finding 100%, but guaranteed by government you will be having 0%. So there are 3 criteria which you have to learn according to this: 0%, then 150%, and then 20%. For rest, you will be finding 100%. Beta, although more things are there, but those all percentage doesn't come in your exam usually. Okay. Can I start the question? Okay, let's start the question. You will be feeling more comfortable if you will be practicing the question. Let's start the question practice first. Can I start, please? And don't worry, at this time, maybe you will be feeling some less confident because you haven't practiced. Now you are just about to practice. After doing the practice, you will be feeling more comfortable. Don't worry, trust me. Practice with me. Question number 1. Now see, so we are practicing here question from our combined PDF where I have merged all the questions. So first come to question on page number 7.93. Yes, only Darshan is there who has given me ready. I am still waiting for all rest of the students. But give me ready so that I can understand that you are ready to face such situation also. Don't worry, everything will be easy. Trust me. This is the examination question. Those which are watching at YouTube, they can also give their presence by giving their like, share, comment, etc. Now see, and those students, भाई जो जो बच्चे हिंदी के हैं और उनको अगर ऐसा लगता है कि कोई भी चैप्टर उनको फ्री में चाहिए, भाई मैंने ना कई सारी वीडियो डाल रखी है अपनी फ्री में, डोंट वरी, कोई पैसे नहीं ले रहा मैं उस चीज के, आपकी हेल्प करने के लिए। तो आप लोग कहीं भी सर्च करोगे तो आपको मिल जाएगा। ओके, यस, नाउ प्लीज सी। Commercial banks has the following capital funds and assets. Commercial banks, okay, it means CRAR to be applied. Okay, okay. Examination question. Okay, okay. See, has the capital funds and the assets. Okay. Examination, in the examination question, we are having the capital funds and assets. Okay. So easy. So easy. Now what we have to do? Question has given us clearly the instruction that for this we shall be allotting you marks that segregate the capital funds into tier 1 and tier 2 capital. Number 1 requirement is there. You have to calculate all these things into two parts, tier 1 and tier 2. Okay. Can I prepare a column to make you more comfortable, more easy? Yes, sir. I am gonna prepare here a column. Tier 1 and then tier 2, tier 1 and tier, okay, uh, this is 1 and this is 2. These are what? Tier. I am showing you all the things on the screen along with the question so that you may be feeling more easy. You have to tick only in which column such will come according to the definition which I have shown you here. Where is that? That is this one, I think. Yes. Yes, this one. According to this, you will tell me in which such will fall. Okay, beta. This is also the PDF which have been uploaded in the last session. So you can also download such from there. Okay. Now see, we are practicing the question tier 1 and tier 2. And after that, we shall be practicing risk weighted assets percentages. Okay, beta. Don't worry, everything will be easy. Only you have to be more systematic. So I am starting the practice. Yes, equity share capital. Beta, where such is to be posted in case of tier 1 or tier 2? Please tell me equity share capital tier 1 or tier 2. Everyone, I am waiting. Equity share capital will be in tier 1 or tier 2. Give me 1 or 2. I am waiting. You have to answer. Hmm. Okay, please write just one more thing here. Please write here more clear word. I am writing here so that please write here perpetual cumulative preference shares, those which are perpetual, sorry, non-cumulative, perpetual non-cumulative. Okay, and please write here perpetual cumulative preference shares. Okay, preference shares. Now see, tier 1, very good. So these are what? Tier 1. Tier 1. This will be covered in tier 1. Next one, perpetual non-cumulative. Perpetual non-cumulative will come in which category? Of course, tier 1. Tier 1, which are more permanent capital. Okay, next one. Cumulative preference shares. Beta, usually what happens? We usually redeem the cumulative preference shares. Beta, where such will go? Of course, these are part of tier 2. Tier 2. Okay, tier 2. Next one. Very good. Next one. Now tell me everyone. After this, and after this. Statutory reserve. Where will such go? Tier 1 or tier 2? Who will tell me? Statutory reserve are all reserves and surplus except revaluation reserve are part of tier 1. Yes, of course. It means such has to be transferred to tier 1. So beta, where will such go? Of course, tier 1. Statutory reserve will be calculated under the tier 1 capital. Next one. Capital reserve. You know capital reserve? 45 lakhs. Out of such, yes, beta Darshan, out of such only 13.5 lakhs were due for revaluation. It means first we have to calculate all reserves except revaluation reserve. So beta, how much amount is there? Beta, see. How much amount is there? So total is 45. Beta, out of such 45, if we reduce 13.5, it means except revaluation reserve figure will come out. Yes, of course. First, we have to calculate that amount which belongs to tier 1, and then we shall calculate for the revaluation reserve amount tier 2. Okay, so first we are calculating tier 1 part of such reserve and surplus. So for that we have to exclude the revaluation reserve from 45. We have reduced 13.5, and the amount will come out how much? Yes, of course, Darshan, 31.5. If we reduce from 45, 13.5, then the figure comes out 31.5, and that will be part of tier 1 because that is the reserve which is excluding the revaluation reserve. So we shall be posting such to tier 1. So this will be out of such 31.5. 31.5 will be part of tier 1. And what about 13.5? From 13.5, we have to reduce 55%. from 13.5, we have to reduce the 55%, then we shall be able to find out the 45% that will be form part of tier 2. How easy it is, sir? It is the question which is the part of ratta. Yes, beta. 40, this is 13.5. See, 13.5 multiplied by 45%. Should I do this? Because if you will reduce 55%, the remaining amount will be 45%. Yes, of course. So how much amount will be there? 13.5 multiplied by 45%. That is 6.075. 6.075. That will be formed as a part of tier 2 capital. Okay, beta. How easy it is. Now see, security premium amount is there. That is the more permanent. That is the part of tier 1 capital. Yes, of course. Okay, beta. All reserve and surplus excluding revaluation reserve. It means such will form part of tier 1. Is there anything else which we have to calculate for tier 1 and tier 2? Yes, sir. What is else, sir? See, these are the things which we have to check whether there is any accumulated losses, whether there is any intangible assets, deferred tax assets, or is there any investment of in the asset side. We have to check. Is there any investment that has been invested in the subsidiary of bank? Okay, it means we have to calculate the fund which have been blocked or which have been lost are not available to face the losses at the ready time. Anyways, now we have to check in the asset side also. Beta C. Please check in the asset side. Is there anything like this? Up to this, no, sir. There is no such a thing. Okay. Then check later on. Yes. Yes. We have find out. See, we have to check here. We have to check here. See, beta. We have find out that there is intangible assets. Yes, we have to reduce such. We have to reduce such from the amount which have been added up to this, and now we have to reduce such from for calculation of tier 1 capital. Okay. And what about deferred tax? Yes, we have to calculate by reducing this. We have to reduce such. Is there anything else? Is there anything else which we need to calculate for such a thing? No. Because we have learned these things that if any accumulated loss is there, intangible assets is there, and deferred tax assets is there, or there is any investment, please check in the asset side. Is there any investment which have been done by the company, the banking company in the subsidiary company? No. Beta, loss reserve, etc. Beta C, loss reserve, etc. are not given in the question. Hence, we are not considering. If there could be the figure, then definitely we could have been considering. Okay, beta Darshan. Now see. Tier 1 calculation we have done, and tier 2 capital also we have done. There is nothing to less for calculation of tier 2. Okay, beta. So it is the calculation which have been done. Can I check the answer? Yes, please check. Please check, beta. I have also given the solution there. I think this is the same question. Yes, this is the same question. So what we did, tier 1. First, I am calculating the things here. Okay, beta, please check. I am highlighting. Equity share capital. Where will such go? Sir, such will go in tier 1. So we are calculating here tier 1. Okay, please see the answer I am giving you already in the PDF. For the calculation of tier 1, equity share capital. Yes, how much amount is there? That is 2900. For calculation of tier 1, we will do these things in this way. Tier 1 and then tier 2. Please see. 2900 has been posted. Yes, please check now. What about perpetual non-cumulative preferential? So perpetual name is explaining itself. that more permanent. Yes. So that will be shown in tier 1. Okay, okay. So easy it is. Only that some of the formats are there which you have to follow in each and every question. And in the examination, you are having such a kind of question many times. Anyways, don't take it lightly. All the questions we are practicing here are examination question. Okay, beta. Now see. Now see. What about the perpetual cumulative preference shares? Beta, of course, in tier 2. Yes, sir. Tier 2. We have posted here tier 2. We are calculating here tier 2 capital also. Sir, why don't we calculate in a single figure? All the things must be added together. Yes, I know. But the categorization given by the Basel committee is this one. So we have to follow that. Okay. So another thing is also there. Statutory reserve. Of course, the statutory reserve will be part of tier 1. Yes, we shall be calculating here. What about the capital reserve? Beta, in case of capital reserve, we have calculated the figure. 31.5 will form part of tier 1 and 6.075 will be part of tier 2. So we have mentioned the things here. Next one. Next one. Sir, security premium is also there. Yes, beta. That is for tier 1. Yes. Is there anything else up to this? No. Now for tier 1, tier 2, we are calculating here. But in the examination, you must follow the same sequence by using pencil. First, you have to classify the tier 1 and tier 2. Okay. That will save your time and that will be more efficiency. There will be more efficiency for you. That's another thing that I am taking time to discuss with you all and to make you clear all things. Anyways, now we have to reduce such intangible assets also. Yes. So we have reduced for tier 1 such intangible assets also. See, we have reduced such 18%. Sorry, 18 lakhs. And after that, we have to check these things. Deferred tax assets are also there, 0.40. Yes, we have reduced such also, 0.40. Is there anything else? No, there is nothing which is remaining for calculating such things. So beta, here you will be able to find out the tier 1 amount, tier 1 capital, that is the more permanent capital, and tier 2 capital. All the capital will be readily available if something happens suddenly. So that's the thing which Basel committee want to ask to all of you, that this must be calculated. That's another thing that such can be calculated into a single calculation, but still they have classified, then there could have been some reason which we are unable to understand. Those are very talented person. Anyways, capital funds we have calculated 63,631,9.175, and this will be the figure which will be utilized in the formula to calculate the percentage, and that percentage will be at least 9% as per the updations. Anyways, so we have put this figure in the item beta. Here the risk is for losing the assets, for loss of assets. Here is the loss of assets, and here the risk for the occurrence of some liability, hence the formula has been derived in this way. What the loss bank has to face if something mishappen, that liability has to be paid. If the contingent liability is there, then and that materialize, then that is also the part of the loss for the bank that has to face immediately. Anyways, along with the loss of the assets, that has to be added. For that, capital must be ready. Anyways, now there is another statement that will be there will be statement showing calculation of risk weighted assets. Beta, we shall multiply all the assets. Anyways, now come to the question first. Now we have to mention on the question the percentage of the risky assets. How much risk is there? Are you ready, everyone? Please tell me everything is clear up to this or not. I am waiting for all of you. Those which are enjoying the dosas, kindly ignore that. The dosa will not help you in exam. Come on, tell me, everyone. Paratha will also not help. Sir, you have told us about dosa only, but we are enjoying the paratha. No, beta, paratha will also not help. Now, please come back to the class. Yeah. So, cash balance with RBI. So, is there any risk percentage? Tell me, everyone. This will be the color now. No, there is no risk. There is no risk. There is no risk. 0%, 0%, 0%. With RBI, no percent, no percent, 0%. So with other banks, now tell me what the percentage there with other banks? Sir, with other banks, 20%. All the things with the other bank will be eligible for 20% risk. At least some risk will be there. Yes. All clear, sir. Okay, okay. Next one, I will also ask you for the risk weighted for my class. So what the percentage you are expecting for the risk associated with my class? Please give the percentage here. What the percentage? And don't say please 100% or 150%. Anyways, it was a joke. Now, please. Claim on banks. One bank. This bank is having the claim on banks, on other banks. On other banks. How can he say that I am claiming to myself? No, definitely claim will be on other bank. Varsha is saying no risk. Thank you, beta. Investment, but Varsha, you haven't given feedback. Sunil is saying, sir, 20% risk is with you. Sunil, with me or with question? Anyways, okay. Now, please answer for only for the question. I was just joking. He was answering for the banks. Investment in bond issued by other banks. Oh my God. Another time. Other banks, other banks, other banks. So we shall not see anything else. Other banks, if we find in the question, there will be 20%. How enjoying this chapter is, beta. If such questions, such type of questions are coming in the exam, then take this the भाई साहब ये भगवान का प्रसाद है समझ लो बस. That God is helping directly to you by giving this question in your exam. Investment in venture. Oh my God, venture, khatarnak, dangerous. 150. Real estate and venture are 150%. Oh. Next one. Other investments, sir, these are neither banks nor with government or RBI or PSU or nor venture. Oh, it means 100. Other investments are having 100. अब ये क्या हो गया भाई मेरे? ये क्या हो गया? Other investments are 100. Those are not falling in any other category. So these are 100%. Okay. Next one. So, sir, in exam, if we couldn't find anything regarding these things, so all will be covered in 100%. Yes. Risk on Ajay sir is 100%. Sorry, 0%. And surely we will clearing the exam, sir. Yes. Thank you, beta Darshan. Not with you, sir, for question. Okay. Network connectivity risk. So, technical team, please see. There is some risk percentage for you also. Harshit is saying network connectivity risk is there. Anyways, Manisha is saying for this, yes, beta, very good. Okay. Now see, loans and advance given by, guaranteed by government. Yeah, that is 0%. Loan guaranteed by public PSU, public sector undertaking, PSU. Of course, 0%. Now, what about leased assets? Come on, everyone. So these are neither government, nor banks, nor venture capitals. These are in the other category. In our exam, we will find other than these, those will be in 100%. Advance against term deposit, beta, against term deposit. Use your common sense. You have fully security. Then is there anything risk? No. If a ICI says you that you will be clear, don't worry. Then is there any risk? No. See, in the same way, if you are giving the loan to anyone, being a bank, and you are having the term deposit, FD is there, beta, there is no risk. FD is there only when the amount has been deposited into the bank. Okay, beta, and on that you have allowed a loan. So there is no risk. Oh, these are the common sense, sir. So why did you not told us this? Why have you not told us this one? Because beta, that these are common sense, and you are very talented. See, what about educational loan, sir? Now we are using common sense. No, these are the simple things. There is no security. No, sir. There is no security. No, sir. Then these are the government, RBI. No. PSU. No. These are other bank. No. Venture capitals. No. It means, of course, 100%. Next one. Next one. What about other things? See, building assets are there. Are these assets which have been held by other banks? No. Are these assets government or PSU? No. Okay. These are not the same. Okay. No. And then what about rest? Are these venture capitals? No. So what the ratio is there? Of course, 100%. Next. What about next? Okay. These are the things. All the things have been dealt in tier 1. Yes. Now see. What about these beta? Next one. Oh, one more thing is also there. These are the things. Acceptance, endorsement, etc. Beta, what about these? These are the content liability of balance sheet items, sir. These are the 100%. Beta, what about real estate, non-fund exposure? So real estate coming, then 150% is also coming. Okay. So can I start to put the figure into the solution? Yes. How the things to be done in exam with the presentation beta in this way. Statement showing calculation of risk weighted assets and off balance sheet items. Beta, funded risks and off balance sheet item. Please see. Cash and bank. Okay, first cash and bank. Please take cash and bank. 350, 0%. Okay. 350, 0%. Okay. 350, 0%. No risk. Next one. Balance with other banks. 475, 20%. 475, 20%. Amount will come out 95. Please use calculator. Please use calculator. Please use calculator. In this way, you have to present in exam. Next one. Claim on banks. Other banks. How much claim is there? 10, 25 and 20% risk is there. Yes. 10, 25. Beta, in the next question, we shall be on the speed. Okay, beta, we shall solve this next question speedily, please. If you have any doubt, then please tell me all the things. Next one. Beta, we have already considered that loss because we have reduced the capital. See, either reduce from there or take here. Anyways, now see. Those are the lost part of capital. Okay, beta, Darshan. Anyways, now next one. Investment in bond issued by other banks. 78 and other banks. Okay. Other banks means 20%. 1560. Next one. Venture capital funds 1700. Beta, risk is 150%. 2550. Please use calculator. Please use calculator. Next one. Beta, there is limitation of lecture. Again, reminding the same thing. And that's the reason I am showing you the solution, because I have to discuss, I have to explain also, not only to write. So that will be more comfortable for you, so that you may be able to understand and get each and everything. A lot of points are there. You already know the 7 units are there in this chapter. So you have to be concluded in a single PDF with a solution also, practice also. So see, Other investments, of course, 100% risk is there for other investments. Next one, loan guaranteed by government. Beta, 160, there is no risk. There is no risk. Now question will be asked by students, sir, should we show here? Yes, beta, we should show, so that we can conclude the things in a single sheet, because 0% are also required to be shown as per the Basel committee requirement. There is a format. Anyways, now next, because while you will be auditing, then you will be finding that format, forms and format. Okay. PSU, there is no risk. There is no risk. Next one, leased assets, 4%. Sorry, 4 and 100%. Leased assets, 4 and then 100%. Next one, advance against term deposit, no risk. Advance against FD, no risk, because all the funds have been secured fully with the liquid cash. Education loan, 12, 100% risk. Education loan, 12, 100% risk. Premises, see, premises, furniture, fixtures and other assets, this one 100% risk. You know how much bank is being safe now. Such ratio is to be maintained to cover the risks which public can bear due to failure of bank. First, bank must be healthy so that bank could face its own loss from its own capital. Next one, acceptance endorsement letter of credit, LC, etc., 100%. And last thing, exposure to real estate, 1900. Then also such is 150%. But in this way, you will be able to find out the total loss that could have happened to the bank if something mishappens. Sir, for all secured loan advances, 0% risk, sir. Yes, beta, you are right. Now see. Not all beta, only FD and government and RBI or PSU. Beta, we have calculated such and such percentage, this one. Is this at least 9%? Yes. If so, that means bank is safe. So ratio has been maintained. Yes. So bank will be called a good, financially solvent. Now, I am moving to next question, not next chapter. One more question I want to practice with you all. Now that will be in the fastest manner. So please be ready. November 2020. This is the question. November 2020. Please see this question. Can I start? Everyone give me ready. We shall be taking the break after this. Okay, beta. Then after the break, we shall be starting the NBFC. Don't worry. But first, we have to get clearance about this chapter completely. Beta, tell me, are you ready for November 2020 examination question? Yes. Show me your activeness, everyone. See, Vasu Commercial Bank has the following capital funds and assets. You have to categorize into tier 1 and tier 2 capital. Find out the risk adjusted assets also and risk weighted assets ratio also. Question seems to be easy, sir. Can we do it in homework? Beta, yes, you can do, but still, I want to discuss with you at least categorization so that there may not be any mistakes for any student. Anyways, now see, tier 1 and tier 2 and then risk weighted assets percentage. Only this will be done by me. Okay, beta? All rest things will be done by you in your homework. Come on. Do it. Equity share capital that will come in. That will come in tier 1. Sir, more permanent, more permanent, more permanent. Oh, stretch reserve. Sir, all reserve and surplus except revolution reserve. It means that is the part of tier 1. Capital reserve, out of which 26 crore were due to revaluation. Oh, 26 crore were due to revaluation, sir. Sir, 87 minus 26. First, we have to calculate the tier 1 part. So, 87, please use calculator, everyone. 87 minus 26. So, 61 is there. That can be called as the part of the tier 1. And what about rest 26? Sir, now we shall do 26 multiplied by 45% directly. Okay, beta? Yes, very, very good. So, do it fast, everyone. 26 multiplied by 45%. 26 multiplied by 45%, that is 11.7, and 61 is this side for tier 1. Anyways, now cash balance with RBI. Now, beta, it's the time to do one more thing. Is there anything else that had to be reduced? No, in this question there is no any part which has to be reduced for the calculation of tier 1. Intangible assets are not there, deferred tax assets are not there, etc are not there. Anyways, now we have to calculate the risk weighted percentage. Now, RWA, beta, don't say it's Resident Welfare Association. Some of the students usually give a joke. Now see, 20, that is what? That is with RBI, so there is no any risk. Okay, no any risk. Now see. With other banks, 20% risk is there. 20% risk is there. Yes. Other investment, of course, these are neither government nor the RBI, PSU, etc. Hence, such are for 100% risk. Guaranteed by government. Loans have been guaranteed by government. So there is no risk. For others, for those which have been guaranteed by others, of course, there is 100% risk. Premises, furniture, etc. These are also under 100% risk. Off balance sheet items, guarantee obligation, etc. These are of course 100% risk. Okay, beta. Acceptance, endorsement, etc. These are also 100% risk. Such liability can occur. So easy. Sir, you give daily homework. I join from today itself. Okay, beta. Now see. After this, November 2020 question, there is one more question to be discussed here. Beta, please see what the kind of the questions you are having in the exam. How easy such are the questions. I have also given most of the past examination question here. Beta, please come to page number 7.99 also. This is the last question, last practice for this chapter. Please do it fast, everyone. And don't say it now that it is typical. I don't think so that there could be any person who can say that this is typical, because now you are practicing. Okay, beta. Now, please tell me, everyone, how are you feeling about this capital risk adjusted ratio? Again, the question is saying the bank is there. Bank has the capital fund and assets. What is the requirement of the question? Question 1 to ask you, please segregate the capital fund into tier 1 and tier 2, and also find out the RWA. How easy it is. Come on, do it. Tier 1. Tier 2. And what about the RWA? Okay, I do just this thing. This one is, no. I am putting the line only up to here and also here. After that, all the things will be for RWA. Easy, sir, easy. Okay. Now see. बस 5 minute break ले रहे हैं. After 5 minutes, we shall be taking a break. Beta, see. What about the equity share capital? Of course, tier 1. What about statutory reserve? Of course, tier 1. Now see. Profit and loss debit balance. Oh my God, this is the new thing. Sir, we will say in exam, this is the out of syllabus. No. That is also part of reserve and surplus. Okay, beta? That has to be reduced for tier 1 capital. These are the losses part. Next. What about the capital reserve? Beta, in the case of capital reserve, 25 crore is due to revaluation. It means first we have to calculate the rest part except revaluation reserve. Rest part is 105. So 105 will come in the tier 1. And what about the 25%? 25 rupees. So 25 multiplied by 45% will come into the how much amount is there? Yes, beta, accumulated losses should be deducted in tier 1. Yes, beta, very good. So 25 multiplied by 45%, that is 11.25. 11.25 will come in this. Okay, beta. Now see, what about the percentage for risk weighted assets? RWA we have to calculate. Come on, do it. Do it yourself fast. In 1 minute or 2 minutes, you have to solve this. Sir, are these type of questions coming in exam? Loads of time, beta, loads of time. Usually in each and every second attempt, you will be finding such a kind of questions. Oh, these are the bonus questions, sir. Yes. But only when you are practicing, only then you can say that such chapter is easy. And that must be in systematic manner. Again, I am repeating. You must also revise in the systematic manner. Anyways, cash and bank balance with banks, it means with other banks. Oh, sir, this is 20%. With other bank, na? With RBI, oh, sir, this is RBI, this is 0%. Claim on bank, oh, for other bank, that is 20%. For other investment, not covered in any other things, 100%. Guaranteed by government, how can we suspect on government? That is 0%. Guaranteed by ECGC, oh, this is to be taken care of. I am preparing some smiley here. You have to take care of. Guarantee by other than government, you have to take 50% ECGC. Anyways, for others, of course, guaranteed by others, 100%. What about the premises, fixtures, etc.? 100% loss may be there. Lease assets, of course, 100% loss may be there. Acceptance, endorsement, etc. All these are of 100%. How easy, how easy. So same types of questions are being coming again and again. Yes, chapter itself is a bonus chapter. Very good, beta. But you could be able to say like this only when you are practicing and revising in the same sequence in which I did. Do you want to see one more thing which will make you more confident? And after that, we shall be taking the break. Okay. Now I am coming to do one more thing with you all. Beta, please come to icai.org where you will be finding your suggested answer. Please download the suggested answer latest, which have been uploaded by ICI. I think 2 to 3 days have been there. Now I am opening this. Wait a minute. Please open your suggested answers. Yes, now I am opening suggested answer. Okay, beta? Please see. Please see the level of question. Only just one thing I want from all of you, that please read the question. What the kind of questions are coming and how much marks are being given you in the bonus, and you are feeling most of the student, while we see that the students are saying that out of syllabus and tough, etc., etc. No, they don't know how easy paper is coming. See, I think question number 3 is there. That belongs to banking. 3 or 5. Ten marks question was in exam, and that was from the questions you have already covered in class. All the questions of 10 to 15 marks are coming from this chapter, and you will find the things very, very easy. See, what the levels of the questions are being asked. For you, it will be definitely very easy because you have done the practice a lot. Beta, see the question level, 10 marks question, just latest examination question. From the following information available in the books of bank, you see what I am trying to say, beta. I am teaching in ICA study matter from the last 3 attempts, and nothing has been changed by me in the PDF. And each and every time I always give the challenge, then there cannot be any other question except this PDF, because I have concluded the PDF in the single unit, because I have covered most of the things in the single unit. Beta, please be serious. Say what the question is saying here, what the level of question is there in exam, and see, rebate on bill discounted, opening balance is there. And I will show you one mistake in this question. I don't think so. None of the person has noticed such, but still, I will show you some mistake also. Anyway, see, beta, what question is saying? Opening rebate. This is what opening rebate. And this is what, this is the detail of discount received during the year, that is rupees, this one, 1,25,000. Beta, during the year, such discount was received. Can you please do the total bills during the year which were discounted? Analysis of the bill discounted is as follow. Bill discounted amount. Can you please give me a total, everyone? I am waiting for you. Your message. 36,000 plus 34,200 plus 14,000 plus 14,000 plus 12,500 plus 11,000 121,700. This is the detail of bills. Okay. Anyways, analysis of bill discounted. Beta, these are the analysis of bills discounted. According to me, this is not the correct amount. According to me only. This is only my personal view. Why? Because bills have been discounted of rupees 1,21,700. How can there be discount received during the year? According to me, there must be given analysis of sum of the bills, sum of bills discounted pending at year end. This must be there. Otherwise, if we say the analysis of bill discounted, it seems that bill discounted belongs to the during the year total bill discounted, and that cannot be the same figure. If we have discounted the 121,700, then there cannot be 125,000 rupees at discount received. Anyways, now move back to the question. Beta, can you please tell me the solution? See how easy it is. What the question is asking from you in exam for 10 marks. Calculate the rebate bill on discounted year end. Show the necessary journal entries. Compute the amount of discount to be credited to P&L. Definitely there will be one entry for this. For opening, what will you do? Sir, we will do for opening rebate on bill discounted debit to discount received. Yes, for opening. And what about the current? For year ending, sir, we shall be doing in this way, discount account debit to rebate. And what about the remaining? The discount account debit to P&L, of course. Okay, beta. How the amount will be calculated, beta? On 31st March 2023. See, what the days are there after that? See, solution has been given in very presentable manner. Really, see, the solution is also there with the very presentable manner. But why I am showing you these things? Because you, at least you must feel that whatever you have practiced is only from the last 3 attempt PDF which I have already given, and all the things have been merged into a single unit, and these are really very, very easy. Beta, if question has given due date, then we can assume the due date. Can't you zoom through application? I'm not getting what you want to say, beta. Can't you zoom through application? But I am zooming. Now see beta. After 31st March, how many days are there? April, May, and 7th of June. Then April, May, and 14th June. So these are the beta days. These are days. And rebate or bill discounting, you have to calculate in this way. All the things you can calculate easy in the same manner. This is the first entry for opening rebate. Opening rebate. And these are the discount or bill for closing rebate. Closing rebate. Why I was telling you that this will be the mistake according to me, because while we are solving here that this is the total discount received during the year, and then opening rebate and then closing rebate is there. How such discount can be total received during the year if bill have been discounted only 121,700. Anyways, I don't know why many teachers have not raised the voice, because this is the clearly able to see such mistake. Anyways, now coming to the main point of this today's session, beta, you have to see one more thing, that now our chapter has gone over and all the things have been covered along with theory also. Only one thing is there, that is the bank overdraft outstanding. CC limit if outstanding is there out of order, then that can be NPA. Beta, that you can cover easily from the theory. Rest all the things have been covered. Those are really very, very important for exam also. Anyways, now we are taking a break, and after that we shall be starting the new unit, that is what, of course, NBFC. And I have uploaded such figure also, such PDF also in the earlier batch downloading session. Please download such PDF from there. After that we shall be discussing in detail. So please take 10 minutes break. After that we shall start this. I will be I am waiting for your feedback also, beta. Please, my request is there. Please give your real feedback, whatever the feedback you are having for the classes. Please give your real feedback, and you can also give me real feedback at Google review also. Okay, everyone. We are now taking a break of 10 minutes. Bye bye. See you after the break. Sir, break लगा दीजिए. Hello everyone, we are back. Everyone show their presence that you are also back. So we are meeting after the break and with the new chapter. Sir, new chapter? Yes, the name is there. Of course, NBFC, non-banking financing company. See, I'm gonna start. Manisha, Darshan, Khushi, Harshit, everyone, show me your presence fast. Komal, Sahu, Daring, Maring, Darshan, Sunil, Varsha, come on, show me your presence, Prithvi. Yes, I am waiting. I am waiting for your message. Sahu, Rajiv. Yes, Diksha. Vigneshwari, Deepak. Show me your presence fast. Yes, back, sir. Darshan is alive. Okay, yes, we are back. Yes, yes, yes. There may be bill discounted which got dishonored during the year, so difference can be in amount. Yes, but beta, in case of dishonor also, Manisha, we earned. Being a bank, we earned. Because that's the question for the drawer, not for us. Okay, beta? Yes. Now come on, do it. See, beta, NBFC, non-banking financing companies. Non-banking financing companies. Beta, company may be government or non-government. And here, in case of banking company, banking business can be done by banking company or other than banking company. Those are non-banking financing company. Beta, please read this carefully first. And you will be able to solve the question of recent exam also, even from the topic we shall cover in the starting. And that is really very easy. See, NBFC, this is a company. Please read this carefully first. This is a company registered under Companies Act 2013 or earlier, engaged in the business of finance or in the business of investment in shares or debentures, bonds or other securities, or hire purchase business, chit fund company business, insurance business, etc. Any company whose principal business, that is more than 50%, must be finance. Only then we can say that we are talking about NBFC. This is the main core condition. At least more than that is more than 50% business must be for financing. Only then we can say that there is NBFC. Beta, see, every NBFC and banking company has to take license from RBI and also need to follow the RBI regulations. Okay, beta. Now, NBFC means non-banking financing company. Okay, sir, we got it. Have you ever listened about Bajaj Finsef, Cholamandam, etc. Definitely. But after being chartered accountant, you will be offered by the Bajaj also that there is some limit for you without any security. Bajaj will offer you the loan without security even, because that loan has been designed especially for the chartered accountant, and definitely they are earning lot, but there is limit. So that is the example I am giving you here for NBFC. You must have ever listened or you are about to listen. Beta, now see. Yes, chit fund, Lakshmi chit fund, and many more. You can also write, everyone. You can also write here another name, whatever you have listened. Anyways, now see. Beta, NBFC, and in this chapter, first you must understand the NBFC has been designed into three parts. How many parts? Three parts. Number one, NBFC which are able to accept deposit, but that should not be repayable on demand, as I have already told you in the last chapter. In the banking company, I discussed with you that the banking, in the case of banking, the NBFC cannot accept the deposit which are repayable on demand. Only the banks can accept the, yes, Mahindra Finance is also, yes beta, repayable on demand. So NBFC cannot do so. Now see, NBFC cannot do so. So beta, but NBFC can accept the deposit which are payable other than demand. Anyways, second NBFC is there, that is non-accepting the deposit. Non-accepting deposit. Non-accepting deposit are of two types. Those NBFC which are although called accepting deposit NBFC, that is those are able to accept those are allowed to accept the deposit from the public, those are called accepting deposit, and those which are not allowed, those are called non-accepting the deposit, non-accepting deposit from public, non-accepting deposit NBFC. Okay beta, such NBFCs may be big or small based on the same, we can say not systematically, no, systematically, these are what, systemically, beta, please reduce this, systemically important and systematically not independent, systemically independent and systemically not independent. Okay beta, now see, these are what, these are big NBFC and these are what, small NBFC, that is छोटू, तू हम पे भरोसा कर ले, तुझे कुछ नहीं होगा. So systemically independent and systemically not independent. Okay beta, sir, these are the category. Yes, now tell us about third. Beta, third are like hire purchase or lease out as NBFC. In case of hire purchase, you have learned the word hire vendor. Yes, you have listened the word hire vendor. Yes sir. Now see, no beta, no darshan, that is insurance company. Anyways, now see, have you ever learned the hire vendor accounting? Yes sir. In case of hire purchase chapter, we have seen that there are two persons. One is hire vendor and another is hire purchaser. Yes. What was there? Sir, there was one thing, that is a car is there, that is the cash price is there, that is 1 lakh, and down payment is there, that is 20,000, and sir, remaining 80,000 is the amount that has to be paid into two installment, 1 and 2, that was 40,000 and 40,000 along with the 10% interest, 8,000 interest on the remaining amount, and then 4,000 interest the remaining amount. In this way, sir, we find out the total 12,000 interest is there that has to be paid along with the amount. Okay, total 1 lakh, it means total hire purchase price was there, that was 1,12,000. Yes. Beta, at that time, for the purpose of accounting, you were told that suppose Uttam Toyota is exemplified figure. So Uttam Toyota is there from where you have purchased a car. Taking just example. Okay beta, PDF is hanged. Wait a minute. We have to wait. Yes. Now, taking just example that suppose Uttam Toyota, or you can say Maruti, take an example, Maruti showroom is there. Maruti showroom is there. From that you have purchased a car and you are doing the entry car account debit to hire vendor, that is Maruti showroom. And here, what you are saying, hire purchaser account debit to hire purchase sale, etc., etc. You have done these things in the paper number 1. Yes, of course. But you were not told one thing, because there may be some confusion. See, Maruti showroom was not the hire vendor. In actual situation, what happens? An NBFC comes here in the picture. NBFC comes here in the picture, and such NBFC pays on your behalf 80% remaining amount, and you are paying here hire vendor debit to bank for the down payment 20% to such NBFC. Basically, car is being financed to you by NBFC. The NBFC is paying on your behalf to Maruti showroom, and now the balance amount will be recoverable by whom? By NBFC. Here, beta, NBFC will become the hire vendor, because the ownership for the car will remain still with the NBFC up to the payment of the last installment. In the practical life, same is the case with the banks when the car is being financed by the government bank. Okay. Now see what the situation is. But in such case, NBFC has financed to you. Here we will find that in case of NBFC, some norms are different, and they are in such case, usually the installments are of 6 monthly, 1 yearly, sometimes monthly. So beta, here norms for making them doubtful, NPA, categorizing NPA, performing assets are different. So there are different norms for such a kind of NBFC. Basically, in this chapter, we have to understand these type of questions are there only, where you have to focus only on these type of question. Number 1, prudential norm, performing assets and non-performing and their provision. And second part is there, that is the capital fund. Rest all the things are same as like in case of banks. That's the reason I was telling you only 1.5 lecture is sufficient for this coverage. So what I'm trying to say you is, beta, NBFC are of 3 types. And for those, prudential norms are different and provision norms are also different. So we have to understand in this unit only these type of questions. Number 1, theory. Number 2, capital adequacy ratio. Although capital adequacy ratio is same, because that that ratio has been given by Basel III, and that are mandatory for all the banking business, and that has to be followed by both, beta. Hence, capital adequacy ratio is same. Although same, but in the study material there is no question that has been given in this chapter. Okay, beta. So if we have practiced that question from the earlier unit, that is sufficient. Only the name will be different, NBFC or banks. Okay, beta. Accordingly, the question will be solved in the same manner. So there is no question in the study material also. Anyways, now investment valuation rules are also the same, dicto same. Hence, there is no question in the study material also for this. Okay, beta. Now see what the things remain for this unit. Only 3 things. Number 1, that is theory. What do you mean by NBFC and its type? Second one, prudential norms. And third one is last, number 5th, that is capital fund. Today, we shall cover capital fund part, because that will be very easy, and that can be covered with the remaining time duration of current lecture. Rest all things will be covered in the next lecture according to schedule. Anyways, so now I am gonna discuss with you all capital fund. NBFC has to calculate the capital fund. Beta, see, we have to calculate net own fund of NBFC in this way. This is the very simple formula. This is the very simple formula. How we can decide that NBFC is having own fund? What the amount is there that can be called that own fund is there, which is readily available for facing the losses or as per capital adequacy ratio, as you have already done in that case tier 1, tier 2, etc. Beta see, net own fund is there, that is the equity share capital plus compulsory convertible preference shares capital, and then free reserve except revaluation, capital reserve from sale of assets, okay, brought forward losses, okay, those will be reduced, then deferred revenue expenditure and intangible assets. Net own fund is there, yes. Remember, this is the total fund which is available, but if such that is the subsidiary, then such fund will be called that such fund has not been remained in the business, that has been invested by us to other business. So beta, that's the reason here the excess and over 10% of own fund, it means of such own fund we have to calculate 10%, we have to calculate 10%. Suppose this is what, this is 1 lakh, suppose this is 1 lakh, then 10% of 1 lakh is equal to 10,000. And if in the balance sheet such has been given that such company has invested in the subsidiary business rupees 50,000, it means that was allowed 10,000, it means the 40,000 is there, that will not be treated as own fund. Okay beta, because as per norms only 10% of own fund is allowed to invest in the group companies. Okay beta, now see, in this way own fund will be netted with this figure only. In the examination, if we find the question, then we shall say that net own fund of the company is 60,000. Please tell me everyone, I am waiting for answer from all of you. Is this okay to all of you or not? Everyone, please tell me, is there any problem with this concept? Equity share capital, compulsory convertible preference share capital, those will be treated as equity. Free reserve except revaluation, capital reserve only from sale of assets. Please tell me, can I start questions now? I am waiting beta. Can I start question now? I am waiting. Everyone. Okay, understood. Yes, let's start. Beta, there is another chapter which have been uploaded by me in the last session, chapter number 8. In that also, I have merged all the questions. Okay, so please, you will find the same questions here as you find here in study material. All those questions have been combined in the proper sequence, in the better sequence, in as per my view, in this way. Please start the question practice. Question number 1. Question number 1. Please calculate net own fund. What question is saying here? Please calculate net own fund. Yes, please calculate net own fund. Beta, question is saying, please calculate net own fund of the NBFC based on the following information. Yes. What the amount is there? That is paid up share capital. Yes, paid up share capital. Of course, nothing has been given. Then equity share capital is there. Figures are in lakhs. Free reserve. Yes, of course, reserve and surplus is there. That is free reserve. That is 250. Then compulsory convertible preference shares are there. Yes, compulsory convertible preference share. Those are how much? 50 lakh. And revaluation reserve is there. That will not be. Yes, beta. That will not be included here. Okay. free reserve except revaluation reserve. How much is the total? 450. So 450 is what? That is on fund. If I ask you, come on, tell me what is net on fund, then what will you say? Sir, we have to calculate excess over 10% invested in group companies. There is nothing which has been given as an investment in this question, that is nil. Hence, we can say net on fund will be same 450. Okay. Now please see. Beta, same questions are there. Don't worry. You can also cover from here. Study material, illustration number 1. Okay, beta. All the things have been rearranged. Nothing else. Beta, you can see from study material also. Don't worry. Okay. Okay, beta. Now, moving back to the PDF. Because in this PDF, I have also merged past examination questions. So there will be no any requirement for you to see again and again to flip the pages, etc. Okay. Now, problem number 2. Problem number 2. See, Templeton Finance Limited is a non-banking finance company, NBFC. It provides you the following information. Lease out assets are there, investments are there, investment in subsidiary group company. Okay, we have to check. We have to check. In debentures, okay, we have to check both of these. Okay, these should not be 10% of on fund. If these 200, these becomes total 200. If that 200 is more than the 10% of own fund, then that excess has to be reduced for the calculation of net own fund. Anyways, now check. Cash and bank has been given, deferred expenditure has been given. Okay. Now check paid up share capital has been given. Okay. This will be added. Yes. Freezer will be added. Yes. Defer will be adjusted. Yes. Of course, will be adjusted. See, defer revenue will be reduced. Yes. Now see, loans are there. No, we have to calculate the own fund. अपना खुद का कितना fund है? You are required to calculate net own fund of company as per NBFC. Okay, beta. Systemically important on deposit and deposit taking and non-deposit taking. Okay, no issue. How easy it is. Can you please calculate? I am waiting, beta. Can you please calculate? Sir, you do not need to wait. You can calculate and we can also calculate. Beta, see, calculation of net on funds. First, we shall calculate on fund and then we shall calculate the excess part that has been invested in the other companies of the same group. Now see, paid up share equity capital, paid up क्या है? Share capital, equity capital. That is how much? That is, of course, 100. Figures are in crores. Done, sir. Very good, beta. But I have duty to do the question properly. So I have to do, beta. I know you can do easily. Free reserve and surplus except revaluation reserve. There is no revaluation reserve. So we can post that figure directly. Oh. Now, there is nothing which can be called as to be added here. So total figure will be there. That is 600. This will be called as own fund. No, this will not be called as own fund since we have to reduce deferred revenue expenditure also. Yes, in this question we are finding deferred revenue. Is there any losses, intangible assets? No. Only the deferred revenue expenditures are there. Minus deferred revenue expenditures. Or you can say deferred expenditure. How much amount is there? That is 200. It means 400 is there, that can be called as that this is the own fund. This is the own fund. I am not saying that this is net fund. No, net own fund. No, this is own fund. Now we have to reduce from here. One more thing, that is less excess investment in group companies over 10% of own fund. So beta, excess investment, how much investment is there? That is, sir, total 200 rupees has been invested, 200 crores have been invested in the form of debenture or shares of other group companies. So 200 has been invested. Yes, sir. How much is the excess over 10%? Sir, 200 have been invested and the 10% of this is its 10% is how much? That is 40 rupees. So can we say that 60 there, that has been invested excessively? That has been invested excessively? Yes, of course. So can we say that net own fund is rupees how much? That is 340. Yes, sir. We can say. Just on 2nd September, I got your previous PDF after follow-up with institute. Okay, beta. Please download from the earlier section. Okay, beta. I will again upload today. Don't worry. Okay. Anyways, now please, for this chapter, you do not need to take so much of tension, beta. All the things are there as per I say study material. You can also, this is in the same sequence, only the things are there. I have also merged some extra questions. Okay, beta, please see. Now check what the examination, what the questions you are having in your exam. Sir, what are you saying? Yes, you are moving us directly to the examination questions, sir. You should not do this. No, beta, these are really very, very easy. And you are able to solve the questions directly of exam. Oh, please check the examination question. Directly I am moving to you with the examination question. Beta, what the kind of the questions are being asked in exam, and the students are saying very tough exam. Only those are saying like this which are not practicing. Wait a minute, I am showing you the questions. You have already checked that from banking we have in the examination 10 marks question, and now you will see one more question, that is question number, that is question number 3. I hope you are seeing the suggested answer. Question number 3 is there. Anyways, please read this carefully. B part. Please read this carefully, and this is you. Do you know how many marks are there? 5. So from banking and NBFC, you are getting 15 marks. Yes, beta, same. For both same. That's the reason I have not discussed anything about the systemically dependent, independent, etc., etc. Okay. Now please check. Please check the question, beta. Very first day we are while learning this. Okay, Varsha, don't worry. I will ask to technical team and they will definitely upload today. Now see, Shriram Finance Limited, sorry, SR Finance Limited is a NBFC. Extract of the balance sheet are as follows. Equity share capital is there, paid up capital, okay, free reserve, non-current liabilities, loan, deposits. In the case of assets, there is property, plant and equipment, investment in the group companies. 975 rupees is there. 975 lakhs rupees are there. Jalebi, yes. Yes, these are the jalebi, yes. 975 lakhs are there that has been invested in group companies, and you are required to compute the net own fund. Okay, beta, how easy it is. How easy it is. Okay, let's solve the question. Can you please solve this? Yes, sir. Please solve this. Calculate the net own fund. And please check the answer also. I am showing you the answer few minutes later. Please give me that you have done with the super fast speed. How easy it is. This is the latest examination question. I don't think so. There could be anyone who will say that, sir, the paper was typical. Beta, according to me, paper paper contains only the new style of thinking. Otherwise, there will be nothing which is coming in exam new. Since last 10 attempts, I am continue focusing with this PDF only. Sorry, but I have not changed I have not added the question more in my book. And since last 10 attempt, I have not updated anything else except the years and figures, etc. Nothing else. Even not the latest examination question I could add, because I couldn't find any new type of variety of the question. That's the reason I always prefer the single PDF. Completed. Got it right. Okay, beta. Now see. This one will be added. This one will be added. There is nothing which can be called as reduction. So total will be how much? That will be 900. 900. That will be on fund. Then we have to check more than 10% of that. That is the 90. More than 90, how much amount is there? 975 minus 90. That is 885. I think, yes. Yes. So minus 900. That is 15. 345. See. This one. Is there anything which we are missing? No. 970. 10% of A, that is okay. 120. Oh, 1200, not 900. 1200. So of that 10% is 120. 975 minus 120. That is 885. 885 will be reduced from there. That is 345. Yes. So 345 is there. So without practicing more except this class, you are, according to me, able to handle each and every question of exam, except the prudential norms, which will be covered during the next class for the NBFC. But as I told you that this is the graph which we have to follow. That these are the types of the question which will be done. So you have done this capital fund also. Okay, beta, you have also covered this one. Only one thing is there which can be called as pending. That is prudential norms. Sir, can we do something in homework? Please give us a homework. Yes, why not? Why not? Please take the questions in your homework. Question number 1, 2 is there. Already you have solved with me. And no, only the theoretical part is there. Okay, beta. Rest all will be dealt with me in the class. Don't worry. Okay, please download this PDF and read this PDF carefully, so that in the next class you may be able to do all the things timely. NBF financial statements are same as that of company, sir. Yes, beta. Yes. Okay, everyone. Now it's the time to close today's session, because that topic remaining is a big topic, and that will be concluded into a single flow. Otherwise, there will be no taste in the class. We shall be practicing all the questions also. Okay. And I hope I could deliver with you all. Beta, please give your feedback, whatever feedback you are having about the class. I will move from the studio after seeing some of the feedback from here. Whatever the feedback you are posting here, I am also looking at the same time. Okay, bacho, bye bye. Take care. Enjoy. Please also give me the Google review. Please also give me the Google review. I will be feeling very, very lucky if you will be posting your feedback today. Anyways, happy Janmashtami, beta, everyone. Okay, everyone. Bye bye. See you. Sir, close kar dijiye session.